Good afternoon, everybody. Going to go over our Forex trades for today, Thursday, October 29th. This is the day after the Federal Reserve met yesterday and made their announcement on their decision on interest rates, which, as we all know, they weren't going to change them. So they left them unchanged, but it was all about their wording, and they became more hawkish in their wording after. It wasn't a press conference. It was just that they released a statement along with the decision. Became more hawkish, so it actually increased the odds of a rate increase at the December meeting from about 31% to about 43% last night. That's still not great odds, but almost 50-50 on the odds there. I think the street is really divided on what's going to happen depending on whose research you read. You know, some of the firms and the analysts, they make a point or a case for raising them in December, and some make a case for not raising them in December. So it's pretty interesting. As far as economic data this morning, we got the GDP for the third quarter for the states came in at 1.5%. Estimates were 1.6%. Another terrible number for GDP. That's annualized, by the way. Third quarter GDP, if you take out the volatile food and energy sector, which is really the GDP that you like to really watch, the estimate was 1.9%. It came in at 1.3%. So we're just about growing here in the States. No inflation to speak of. No, very, very little growth in the economy. And as we've said before, Europe is, some countries in Europe are seeing deflation already. Japan has deflation. And China's economy is slowing drastically. What else came out this morning was pending home sales. Oh my goodness, this was terrible. And we've been saying housing is slowing. Hopefully you're listening. Pending home sales came in with a contraction of negative 2.3% growth. Contraction, negative 2.3% contraction. The estimate was for a 1.0% growth. So remember last week, I think it was the builders, home builders sentiment index, and it was at the people on TV were raving how high it was and how great it was. Here you got pending home sales cratering, couldn't even match a 1% growth, came in with a contraction of 2.3%. So absolutely hysterical. The National Association of Realtors finally came out and said signs of a slowing U.S. economy may be causing some buyers to take a wait-and-see approach. Of course, they left off saying anything about hedge funds, how they were buyers for the past few years, and how some of them stopped or slowing. They don't make that comment in their statement, right? But if you delve into this information, you can get it all and make your own forecast in your own mind. Pending home sales tumbled the most since 2003. Just not good data there. Initial jobless claims came out, and we came across a great chart. Since QE ended, you have job cuts just continually going higher. If you were to see it on a chart, a chart, say like a stock price, right, or a currency price, you could see one that's rising. So job cuts, so means more and more job cuts are being announced, and yet the government gives us initial jobless claims is trending down. Just as we all know, the government keeps saying unemployment's trending down. It's an absolute joke. So obviously the government is lying, because the corporations aren't lying. They're the ones announcing the job cuts, right? So-and-so lays off 5,000, so-and-so lays off 12,000, whatever, right? That's real. They're actually laying it off. The government, they finagle their number of initial jobless claims, or unemployment is way down here. Everything's so rosy. That chart lays it right out there for everybody to see. Came across a great article about why investors would. It's on Bloomberg if you want to find it. The author is Lisa Abramowitz. She's really good in their bond department at Bloomberg. Great article she wrote of why investors in Europe are buying negative yielding debt from countries, from Germany to France and Spain. There's actually now $2.6 trillion invested in negative yielding country debt. The highest, obviously the highest ever. Well, I shouldn't say obviously, the highest ever because there was never negative interest rates before. But the last reading of it, I guess last quarter was 2 trillion, or last month 2 trillion. It went up by $600 billion. So she writes why investors would be willing to take a negative return on those bonds. Kind of an interesting read if you want to look it up. Anyway, so let's get to our trades. Busy. Remember, this is what was yesterday? Wednesday. So Tuesday night's trades. We didn't trade Wednesday at all. So it's Tuesday night's trades, Wednesday night, and this morning. So we had 6 trades, pulled out 31.4 pips on a size adjusted basis. Of those 6 trades, 3 were full, 1 was half, 1 was 30%, and 1 was 10%. So let's go over. First one here is a full scalp in US dollar Japanese yen. We were long this from 120.402. It just popped right in our favor right off the bat. Just grabbed a quick a quick 5.3 pips. We're going to hold it. Definitely not going to hold it into the FOMC announcement, which is the spike. So we'll take the 5.3 and move on. Excuse me, move on. Canadian dollar Japanese yen. This one we were risking more than US dollar Japanese yen. So we had 50% of a full scalp. And you can see what it did. It never went in our favor, went against us. Once it was consolidating down here and started to take this consolidation out, we took the loss of 12.1. We were initially looking to lose, risking more than 12.1, but the chart of the chart's action told us what to do. So we took the loss of 12.1 pips, or size adjusted 6.1. And then you can see what it did. It ran. And then this big move here is the FOMC announcement. Next one, pound US dollar. This was a full scalp. We were short pound US dollar from 1.53020. Another one went right in our favor right off the bat. Again, wanted to get in and out the night before the Fed meeting. So we aren't going to look to make 10, 15, 20 pips, 4, 5, 6, 7 pips, something like that. Grabbed a quick 4.6 pips on it. And then again, as you can see here, this big move down is the FOMC announcement. Next one is Aussie US dollar. This was after the announcement. We were short from 0.71019. This we had 30% of our normal size. We were trying to piece this out. We did piece it out as far as we pieced out a third, and then we were hoping to piece out another third, keep moving down. It just wasn't happening before we were shutting things down for the evening. So we had a third out. The 2/3 we just put in the cover as 0.7088. We got covered 0.70882, picking up 13.7 pips during the night, picking up on a size adjusted basis 4.1 pips there. Euro Aussie, we were short this 1.54011. This was a full scalp. Went in our favor pretty quickly, but it's a pretty volatile pair. So we grabbed a quick 15.5. We weren't going to piece out of it. You have a good amount of size, and it is pretty volatile. So you just want to get in and get out. So we grabbed 15.5 pips on that one. And then New Zealand dollar Japanese yen. This was a swing trade that we were in. We only had 10% of our normal size because we were risking upwards of 200 pips. We were short from 81.361. Held it going into the Fed announcement. Held it going into their announcement. The reason we held it, we were in the money by a pretty decent amount. This is the Fed announcement, and then this is their New Zealand's announcement, or Royal Bank of New Zealand announcement of their interest rates. So we kind of held it through this wiggle here. I mean, it's kind of a big wiggle, about 50 pips or so. Ended up covering 80.560, picking up 80.1 pips, or size adjusted 8 pips, since we had 10%. Probably could have covered as it was wiggling down here, but it was just so fast, violent moves. And we wanted to just cover and get out of it before we shut things down for the evening. So it was a nice little trade. And you can see what it did. It ended up coming down a little bit more throughout the night, and then eventually rebounding. It's about 30 pips from where we covered. right now. So if you're still short it, you know, it's a good trade. There's been a lot of different research on New Zealand dollar as well. The New Zealand dollar, the amount of trading in New Zealand dollars in the currency world is actually larger. If I remember correctly, it's actually larger than the economy. So in other words, whatever's traded on an annual basis of New Zealand money, so New Zealand yen, New Zealand dollar, New Zealand Canadian, you know, all the different New Zealand pairs that are out there, all the money combined, I believe it's bigger than their entire GDP of their economy, which is just staggering. It really is. Okay, anyway, so that's it. We're going to wrap it up. If you're still trading now, good luck. If any signals come out, they'll be coming your way. And we'll be doing a video. Oh, again, all these trades are on half our normal size, of course, because it's the end of the month. If we get any trades tonight and tomorrow morning, we'll do another video tomorrow. Have a great rest of your day.